Well, there was a time when people thought only really rich people could be in the stock market, and there's some mystique about it, and people think it's really complicated. Well, let's see if we can really simplify it for you. Tyrone Jackson, the Wealthy Investor, is here today, and you teach that Sesame Street version of investing and saving your money and multiplying your money. That anybody can understand. Is it really that simple, though?
It really is that simple. You know, I was raised by a single mother. We knew nothing other than just how to survive and try to pay bills. And the internet changed everything for anybody who's interested in putting money in the stock market.
Well, let's talk about what the Dow Jones Industrial Average even is. Just let's take it very basically, right from the beginning.
Okay. Basically, there are, thousands of stocks that can be traded in the stock market. If you look at the top 30 stocks, they're in this index called the Dow Jones Industrial Average. And here's the thing, they're names we all know: CocaCola, McDonald's, IBM, Verizon.
So these are supposed to be some of the strongest companies in the world.
That is correct.
Okay.
And on Wall Street, they call it market cap, right? Because they're so large. But these are names that you all know, and anybody can buy 1 or 2 shares in these
So when
companies.
you see that the market, the Dow, is up or down, that's really only those particular stocks in that average. You go outside of that, it's a totally different ballgame. Now, do you recommend staying inside the Dow then with those 20 stocks in order to be a basic investor?
I recommend getting a financial education and learning how the stock market functions, because all you need is an online brokerage account and you can own a share of any of those 30 companies.
And 30 companies, right. And well, you can open a brokerage account with what, maybe $500?
Yes, anybody can do this. E-Trade, TD Ameritrade, any of that kind of stuff. Your brokerage account, Mark, is just like a checking account. In fact, you get checks and debit cards, except you have access to Wall Street.
And you can invest in stocks. And
that
if
is
the stock
correct.
does well, you have more money in your account.
You would have something called wealth. And wealth means that you have more money or something that's of greater value than it was, let's say, 3 months ago.
Let's talk about some of these basic stocks then.
Sure.
Coca-Cola. Everybody knows Coca-Cola. It's known
Yes.
all over the world.
Yes. I love this one as a member of the Dow because in the last 5 years, Coca-Cola is one stock where you could have doubled your money, right? So you say about 5 years ago, Coca-Cola was around $19 a share. Today, it's trading at approximately $38 a share. If you double your $19, that's $40, right? So a $1,000 investment would have been worth $2,000. $10,000 would be worth $20,000. $100,000 would be worth $200,000. What did you do? You just held the shares.
And you just held it. Now, but don't you look at something like that and say, well, maybe they're done, maybe they've shot up, maybe now's not the best time to get involved?
Okay, your last guest was talking about being a genius, and this is the one thing that I have discovered teaching people in the stock market. There's this fear that something has gone up, it will never go higher. So some people in real estate, they say buy low and sell high. In the stock market, we say buy high and sell higher. Where will Coca-Cola be 5 years from now? That's the question.
Okay, so that's really what you have to look at. Now, Disney is something, when I was teaching my kids about money, when they were, 5, 6, 7 years old, I said, what do you like?
Right.
Well, Disney movies, of course, and Disneyland and everything. I said, do you think they're probably a good company? They said, well, yeah.
That is correct.
I said, well, why don't we put some of your money, why don't you be a part owner in Disney?
Well, then you've got it. We talked about this the last time I was here. You've got it. But you look at a company like Disney, a member of the Dow Jones Industrial Average, 5 years ago, $17 a share. Today, $61 a share. I mean,
And again, folks, you need to understand, this is taking a long-term approach to it, buying it, holding onto the stock, watching the company, because there was a time when, Disney was floating around 30 somewhere, went down to 17, now it's all the way up to 60, and it's going strong.
Well, here's the thing, and what pushes these Dow stocks higher is something called top-line revenue. 5 years from now, if you and I are sitting here, we're going to say, we could have bought Disney at $61 a share.
Right.
Buy high, sell higher.
Okay, finally, I've only got 30 seconds to talk to you about Starbucks, because everybody knows this company.
That is correct. I have friends out in Malibu where I live, run to Starbucks every single day. I say, do you own the shares? They say, no, it's too expensive. It's $71 a share. 5 years ago, $10 a share. I mean, this company is generating revenue. It also pays something called a dividend. We don't have time, but when I come back, we'll get into dividends as part of your investment plan.
Okay. I mean, yeah, it's kind of funny. Yeah, I'll spend $5 for a cup of coffee, but I don't want to invest in the company.
No, because that way you'd be rich.
Yeah, exactly. All right. Tyrone Jackson, how do folks get in touch?
Go to thewealthyinvestor.net and download you can purchase the Wealthy Investors Guide or sign up for our free newsletter.
Thewealthyinvestor.net. Tyrone Jackson. Always good to see you. There's the information right up on the screen. And if you don't get it, can't write it down fast enough, we'll go to san diego6.com and click on San Diego Living. You'll find it there. We're coming right back.